Everybody, and welcome to the first ever online edition of the Commercial Credit and Collections Conference Series. My name is Colin White and I'm the founder of Credit Connect Media, and today's event we'll discuss the latest updates in credit management and insolvency through 4 panel discussions. I'm going to quickly share my screen with you now and show you the discussions that are coming up, so bear with me a second. I'm just going to swap screens. Sorry, hold on. Basically, the first session we've got today is on trade credit, so that's going to be starting shortly. We've got a great panel lined up for you on that one. That'll be followed by a discussion on business change, so that'll be viewed as the next discussion. And then at 11:55 we've got a session on zombie companies and insolvency. And then we'll round up at 1:05, and that will be on technology and credit management. So I wanted to quickly talk you through you've got this screens in front of you, and on there we've got a number of options for you to interact with the event today. So as you can see on the top left, you've got the I information. That gives you information about this event and information on how to sign into future events as well, which is coming up later today. So have a look at that. Then you've got the important speech bubble, which is where you can ask questions. So please utilize that today. We want everybody to interact. On top of that, we will be not overloading you, but sharing a number of different poll options. So we want to get your thoughts on what's going on in each session and get that feedback. And we'll be writing up an event post event review on the Credit Connect website, and that share information on the poll results and also any questions we don't cover off in today's event. But we encourage you to interact today and get involved with the questioning. Third option is like a face kind of icon, and on that's information on all our speakers. Have a look at the profiles about them, etc. And then the important next one on there is the file, and that gives you information on our sponsors today. So please have a quick look at that. Without them, we wouldn't have this event, so that's really important too. And then we've got finally there's like a file icon, and you can download and click on links on there as well. So again, please have a look at all of that information. That'd be great. And on that note, we'd obviously like to thank all of our sponsors today for all their help and support with this event. So they are Aon, Begbie's Trainer, Interim, and Cedar. So they're all sponsoring a session each, and you'll see some of those guys pop out throughout. Also, social media alert here. We'd also like you to get involved in the conversation socially, if possible, as well. We've got a hashtag for the event, which is hashtag #ComCredit and Collections. So have a look at that as well. We'd love for you to be part of that. And in addition to this, as I say, get involved with our polls. That'd be fantastic. So let's crack on with the event. Obviously, it's been an ever-changing year. It seems like the news changes as an ongoing basis. So we really wanted to look at, in this first session, trade credit. Obviously, this session is sponsored by Aon, and look at some of the conversations going on. And to kind of help us go through this, I've got Ian Leslie, who is Head of Business Development at Aon Credit Solutions, who's going to talk us through that. So I'm going to hand over to Ian. He's going to give a brief intro and introduce our speakers, and then we'll get the conversation going. So Ian, over to you.
Thanks, Colin. And just to echo your comments, thank you to everyone who's attended this session. I think a lot of us were hoping that Freedom Day would have come and gone, and maybe we'd be able to do this sort of thing in person again. But unfortunately, obviously, that wasn't the case. But this is the next best thing. And the one thing that I know from seeing the content that Colin's booked in throughout the day, not just this session, but also the other sessions, we've got some great things lined up. As Colin said, my name is Ian Leslie. I head up business development at Aon Credit Solutions. I've been there for a little while now, but today is not about me, so I'm not going to bother too much in introducing myself. The most important thing is the 4 panelists I have with me. So we're going to be covering a topic which is how the trade credit industry has been shaped by the pandemic and what we can expect to see in a post-pandemic world. So a nice, easy topic to start Thursday morning with. And as I said, I'm delighted to have 4 excellent panelists with me. Conrad, Elizabeth, Sam, and Anna, who are going to introduce themselves. So Connor, if you're okay to lead.
Morning, everybody. So I'm Conrad White. I work for Imperial Brands, and I focus on not only working capital, but also our internal control within the European division. And therefore, I've had a very keen eye on both our credit management processes across Europe, especially with the changing needs over the pandemic, but also some of the additional risks we're looking at. So thank you for inviting me today.
Thanks, Conrad. Elizabeth, if you're okay to go next.
Of course. Good morning, everyone. My name is Elizabeth. I am head of credit for the Adecco Group UK and Ireland. Yeah, it's been a very tumultuous year, to say the least. It's been lots and lots of changes. I work very closely with all of my different colleagues across the globe, and it has been really interesting to see how the pandemic has impacted not only our day-to-day collections and our strategy, but also how we interact with our credit insurance providers. So really pleased to have been invited to join this debate today. Thank you.
Yeah, I'm certainly glad to have you. Anna, next, please.
Good morning, everyone. I'm Anna Dieguez, and likewise, very delighted to be here with fellow panelists talking at this conference. I'm head of global clients for Aon's Credit Solutions business in the UK. I've had over 20 years experience in the credit insurance market, always in broking. So this is, I think, officially my second crisis, I think, if you like, and I'm sure we'll come on to talk about that later. But yeah, my role really is to look after Aon's largest corporate and global clients together with my team and kind of work with them. And obviously it's been a particularly challenging 12 months. So something I'm sure we're going to discuss over the course of the next hour.
Thanks, Anna. Second and hopefully last crisis that we have to face. And last no means least, Simon.
Hi, good morning. Yeah, Simon Felbin, Head of Business Development for Trade Credit Division within Markel International. Like Anna, I'm 20 years in the industry, and likewise been through two sort of recessionary periods during the last sort of 20 years. And hopefully our industry's fared better this time around as 12 years ago. And I'm sure we'll touch over the course of this discussion.
Yeah, exactly. Just to kind of reiterate as well what Colin was saying about the format. Obviously, you can tell it's a discussion panel today, so we're going to be obviously posing questions to the panelists. We've got 5 questions we're going to go through, but we have got some time at the end for your questions. So if there's anything you want to ask, whether it's directly to a panelist or just generally to the entire panel, then feel free to use the questions box that Colin highlighted earlier. So let's get into the first question, which is a nice easy one to start, which I'll pose to yourself, Anna, which is, what is your opinion on how the trade credit industry has performed during the pandemic?
Wow, that's a big one to kick off with. So, I mean, look, I think, I can talk from my experience in terms of, I guess, my background, which is more the global client segment. And I think if we talk about performance of the industry, one of the key factors I think we all look at is how the insurers respond in terms of credit limit capacity, so risk exposure. So when they're writing credit limits for their clients to enable them to support sort of business. So, I mean, I think if we look at the last sort of 12, 15 months, I would say it was a fairly measured approach. And that would be my summary. I think when we look at the insurers and how they responded around credit limit capacity and risk appetite, I mean, there's no doubt, I think in initial stages, there were risk reviews that were done. And, there's no doubt that there was a lot of activity and I think a bit of trepidation for those of us in the market to see how the insurance market would actually respond. But in reality, it was quite targeted. I think it was a targeted approach that the insurers took. When the actual risk action came, I think it came in areas where we expected it to come. It was focused around those businesses that had already been, I guess, identified as higher credit risks based on their own internal assessments. It came in those sectors where we know the pandemic had really hit the hardest, sectors that, travel, leisure, hospitality. And in reality, the risk action that was taken there, to a certain extent, had limited impact in that moment, because I think a lot of those industries had completely shut down and the trade simply wasn't there. So it was a measured approach. I think in terms of, if we fast track on and then what happened, I guess, over the course of the next 12 months, by Q3, sort of last year, I would say we'd already, I mean, we sort of look at, for our portfolio, the risk acceptance levels, and that talks around credit limit capacity, and how the insurers are performing. And we'd already start to see a recovery, I think, in terms of insurers starting to writing more credit limit capacity for clients. And even Q1, where we did another assessment, because we're tracking this all the time for our portfolio, we've actually got to the point, I think, in Q1 this year, where on average, and I am talking generally now, but I think on average, the risk acceptance levels are now back at pre-pandemic levels, as an average. And there is no doubt within that we have sectors that are still, unfortunately, very depressed in terms of risk acceptance levels. And the automotive sector is one where we know we always have challenges, aviation, etc. And that's a challenge for all of us. But I think it is encouraging to see that there has been a bounce back, and we're still obviously not yet through the pandemic. I mean, I know we talk about post-pandemic, but let's be honest, we're still currently in the pandemic. It's going on a little bit longer than we'd hoped for, but yeah, I think a fairly measured approach.
Yeah, cheers for that. Yeah, I agree. When we originally designed this conference, I think a few of us optimists were hoping that it would be post-pandemic by the time it came around, but never mind, we are nearly there. Elizabeth, your thoughts on the same topic?
Yeah, obviously I agree with everything that's been said already. I think for us, definitely the measured approach has worked quite well. I think we were quite fortunate to have non-cancelable limits. I think that was very clever that we had that during the pandemic, of course. And we actually initially took our credit insurance when Brexit was kind of going live or happening. And I've been in credit for 14, 16 years now. Obviously started very, very young. And I'd never been exposed to credit insurance at all, so it has been a fairly new experience for me the last 3 years. And for that to happen during Brexit and then going straight in the year after into a pandemic, I have absolutely seen the value of having credit insurance, because that is exactly what you actually insure yourself against. It's the worst case scenario. And I think it's really important sort of for businesses to realize that. And, when we're looking at how has the credit insurance performed or adapted, and certainly our supplier, I think, has been great with collaborating with us, giving us the heads up, getting that extra bit of information that you may not receive if you don't have a credit insurance. So certainly some additional benefits that I think we got that I wasn't really aware of them being available, really. And again, adapting the way that they worked with us. So when we're talking about maximum extension periods, those were extended, reporting was extended, to just kind of constantly look at what's happening in the market and how can they support us, and how can we work best with them to protect them and us as a business, of course. So yeah, I personally think that certainly from our experience that they have performed very well in the last couple of years when we have really faced an unprecedented scenario.
Yeah, like you said, Brexit followed by the pandemic, and it's an interesting time. Conrad, your thoughts in terms of the performance over the last 12 or so months?
I mean, I think we've got to recognise it's been quite a challenging time for everyone to actually work out what the likely impacts are going to be and how able, therefore, them to respond. And I think within our industry, we work primarily within the retail, but we also have a lot of exposure to travel, to airports. And I think Anna was absolutely right. In the early days, these parts of the businesses just stopped. And therefore, the credit requirements were slightly different. And I think they responded positively. I think the other areas where certainly our industry is exposed to is we saw a shift in consumer behavior. And the consumption of our product remained the same, but they just started buying in different places. So all of a sudden, we needed additional credit insurance for growth, in essence, in some of our other key areas. A movement from travel retail into grocery, or from small independent shops into the larger multiples. And therefore, that did generate quite an interesting set of dynamics and conversations. I think luckily for a lot of people, that concentration, certainly within the UK as an example, towards the more established larger names didn't create a credit risk problem. I think it created a capacity problem for the credit insurers to actually provide the cover. And that became quite an interesting area, topic and debate of who needs that credit insurance and who can get access to it.
Yeah. Yep, certainly agree. And last but no means least, I would say the unbiased opinion. But Simon, your thoughts in terms of how the industry's performed during the pandemic?
Well, I'll give you my view from an underwriter's perspective, but I think we performed very well. Obviously, a biased opinion. For a start, when I wake up, at the moment, brokers are still speaking to me, so that's a good thing. I think during the last economic downturn in 08, 09, I don't think brokers wanted to speak to underwriters, given the action we took. And, I think we're all, who were around at the time, we hold our hands up. We didn't cover ourselves in glory. But I think we've been a lot more collaborative now with our insureds, definitely with brokers. And I know we're going to go on and touch about the government scheme, but that had a big impact on the way we were actually performed over the last 12 to 15 months.
Yeah. Well, I'll tell you what, we'll stick with you and pick on that. I mean, what lessons do you think were learned from the financial crisis, which have helped how the industry's performed during the pandemic?
Well, it's probably just touching on brokers speaking to us again. I mean, in terms of reputation and client satisfaction, I think, and please shoot me down, anybody here, if I'm wrong, I think reputationally and client satisfaction, it's a lot better now than what it was back in 08, 09. We're basically having more collaboration with everybody involved where we can be more transparent in what we're doing. I mean, Anna and Conrad was correct in terms of the sectors you mentioned. Those sectors were hit at the outset, but Anna was spot on. Even though those sectors were hit, the actual utilization in those sectors was zero, because the sectors just stopped completely. In the travel, there was nobody flying. I mean, hospitality industry, there was no restaurants open. So in actual fact, those limits were actually being removed. They weren't being utilized at that time. So I think there was a lot of smoke and mirrors there in terms of limits being withdrawn at the time. And just touching on the government scheme, the Ian, which we mentioned, I think the government scheme, I think we were very collaborative with the government and the ABI from around about April, May in 2020. I'm not sure if you recall the government scheme back in 08, 09, but the scheme only worked up to a limit of about 2 million, only if the underlying insurer was still supporting that limit. So if the underlying insurer withdrew all their credit limits, there's no way the government scheme would support. So this one, the scheme, is very, very much more comprehensive, where they basically just decided, instead of doing that to leave it to the insurers, they've actually just put a reinsurance scheme in place and just reinsured our whole book. Admittedly, all the premiums have gone to the government, but they would or would bear the losses as well. But as you know, it's been a pretty benign environment, which probably give you some kind of reason why maybe the insurers are probably looking in collaboration with the government and the ABI want the scheme to come to the end, because yes, it's been very supportive and it's got us through a difficult period. But now I think all insurers are looking at this moving forward and thinking, actually, the claims environment hasn't been that bad. Now we've got to start carrying on building our own portfolios, because we've all got shareholders to respond to as well.
Yep. Yeah, completely agree. I mean, I wasn't here back in 2008, 2009, but I've heard the horror stories around what it was like to be a broker in those times. So I'm quite glad that I wasn't there at the time, and I know that it's been completely different this time around. Conrad, you obviously different side of the fence to Simon, but what's your thoughts in terms of lessons that were learned from 2008, 2009 to now?
I can't disagree with what Simon said. I think he's been very fair and balanced, that there has been a quite benign environment. I think the support that we have seen has been very positive. Clearly from our exposure, it's been, I'm not going to say it's been easy, because that wouldn't be fair. And I think there's been an awful lot of internal conversations as well to ensure that we were happy with the risk before we even started to talk to external bodies about we want to extend. And I'm sure most businesses have done the same. They've done their due diligence. So when it came to a conversation about we need to do something about this account or this cover, we've already done that due diligence. We always feel positive about it, and therefore can have that good dialogue as opposed to just throwing over the fence and hoping for the best. And I think that is a reflection of some of the really good teams we have internally who do reflect on what's good business sense and what's a good risk.
Yep. Completely agree. Last person to finish on this, Anna, anything you want to add from your side? I
mean, I was, and unlike you, I was around in the industry. That's an age thing, so won't spend too long on that. But yeah, I mean, look, it was very different. I mean, I think when the credit insurance market hit the first financial crisis, there was a realization very quickly that a lot of the limit capacity that was written out there was actually based on quite old historic information. I mean, it was the times when limits were still underwritten just based on the fact that the buyer's been paying me. What's the problem? That was sort of, there were still limits written on that basis. And I think what the financial crisis really, I think, unearthed was the need for up-to-date financial information. And there was a big evolution, I think, in our market in those years immediately after that financial crisis. Insurers invested really heavily in terms of buyer analysis, in technology, and resourcing up teams whose whole purpose really was to go out and get up-to-date management information. And I think that really changed our industry, hugely for the better, and is really one of the factors I think that has meant that we've been able to weather this storm a lot better in this last 12-month period. And I think it also, there was no doubt. I mean, we're sort of joking about it with Simon that, nobody wanted to talk to the insurers, brokers and clients alike for, it really damaged the reputation of the credit insurance market, and I think the lessons learned there were, the insurers took very swift action. They made it the client's problem. The clients responded. We lost clients from our market. Clients moved insurers who, they felt had treated them really poorly. And I think, when I look now, at how we've dealt with things this time around, I think the communication has been, phenomenally better. I mean, the levels of communication that we're seeing between clients and insurers, is really unprecedented in terms of just the level of contact that's happening, the collaboration that's been happening. I think insurers recognise the need to really engage with clients and consult with them and to be really transparent. And it has helped because, it's meant, Elizabeth was talking about it earlier, much better quality information. When decisions are being made, the quality of information that insurers can really share with clients around those risks is actually very important and very useful for Conrad, Elizabeth, when they're making those decisions internally.
Thank you. We touched on a couple of trends through some of the things that people have said when we were talking around how the industry's performed. So Elizabeth, if I can start with you on this one, what trends have you seen throughout the pandemic, within your organisation that you believe will continue into 2022 and potentially beyond?
It's almost like what trends haven't we seen? Because I do think all of our lives have been turned upside down, proven by the fact that if you look at our backgrounds, you can see we're all working from home. That's of course a huge outcome of the way we have all been working. But obviously referring that specifically back to trade credit and credit management, I think, and we think we're going to touch on that again a bit later, is the number of insolvencies and bankruptcies has drastically reduced last year, which I would say most companies probably weren't expecting. I know in our own scenario, we certainly increased our bad debt provisions, expecting obviously when we all thought the pandemic might end last year, how naive we all were, that come the end of last year, that we'll see more of that when businesses are trying to grapple with coming back into business and might kind of struggle with that. That hasn't happened, and I do personally credit the government incentives and help and support that they offered with that result. And I think it has helped businesses that may potentially not have survived to survive, and obviously do hope that they continue to get back on track and thrive this year once this pandemic is finally behind us. I also think in terms of credit insurance, one of the trends, of course, it was extremely difficult to get limits for new clients or new trade. And I think that's a trend that we're continuing to see. So obviously we check the creditworthiness of all of our clients before we commence trade. And it's incredibly difficult right now because the accounts that we review are 2019. And as I keep saying, the world changed in 2020, and a business that was thriving in 2019 might be barely hanging on now. And I think it was Anna that mentioned it earlier. So obviously what we're keeping a particular eye out for is what industry is the client in. So where we're talking hospitality, events, tourism, or that side of things, we're obviously taking a measured but cautious approach, but you've got to find that fine balance of not becoming too risk averse, because then your competition steps in, particularly in our field of recruitment. And I would say one of the trends that we have seen is where some of our clients did put most of their staff, unfortunately, on furlough and had to pretty much shut down, say, aviation, hospitality. Some other clients of ours, we have had huge trade. So we've kind of seen both extreme ends of what a pandemic can do for a business. So I think from my own experience, those are probably the main trends that I've seen.
Yeah, I completely agree with you on the information piece. I know it's a topic that's doing the rounds at the moment. Is how useful a set of 2020 accounts is going to be, even when they're finalised. So yeah, completely agree with you on that. Conrad, your thoughts in terms of trends you've seen, not just in terms of purchasing, but also from a credit management side?
I think from a credit management side, you're absolutely right. Elizabeth, when we're talking about data and the data importance of what we have, I think historically we had used historical data with a very much stronger weighting than we probably are doing now, and perhaps we're now having a much more conversation about what does the outlook look like? What are the trading terms? Is this business going forward on a strong footing?
Yeah.
Because I think there's still a significant amount of uncertainty out there. I think and I'm sure we'll touch on it later about the insolvencies. We haven't seen a huge number of insolvencies over the last 12, 18 months. Are we going to suddenly see a spike? Is there some risk out there? And I think for us understanding not only the business that our customers are in, but what business their customers are in is the other aspect. How are they exposed to other people's risk? And that's been quite a challenge. But I think fundamentally it's going to be about data. It's going to be about those relationships. It's going to be about trust between all the business partners within the chain for us to succeed and to minimize exposure, because you don't want to not give the credit extensions or the credit insurance to someone, because it actually may become a self-fulfilling prophecy in that if they are heavily weighted within travel and you do not extend credit, they cannot trade because they don't have the funds available after the last 12 months. So you could actually create the problem you're trying to avoid.
Yeah, I agree. And the topic that both of you have touched on in terms of it's still that level of uncertainty, and you've got financials and numbers in that, but you've also got consumer buying habits and whether or not they revert back to the way they were before and how that might impact businesses' bottom lines. So definitely a tough time to be in credit management at the moment, but I don't need to tell you two that. Anna, from a broker's side, what sort of trends have you seen that you think might continue into 2022?
I think some of the ones we previously touched on. I think in terms of, there's definitely been a focus from the insurance market around those businesses that have really strong credit management. Obviously, we're talking to two of those clients that here today, but I think that's become, transparency around what clients are doing has become really important for the insurance market. Insurers and clients getting much closer in terms of working together to understand how risk departments are actually changing what they're doing, how they're changing their modeling, how they're working with their customers, because it's clear that there's never been as much time spent talking about collection plans, recoveries, repayment schedules. Those things have become really important, and I think that's something that we're definitely seeing a much closer collaboration, I think, in terms of clients talking to their customers more and feeling much closer to them, but also the insurance market equally linking more closely with their customers to understand what is going on behind the scenes, and taking a lot of confidence from what they're seeing.
And because we touched on communication a couple of times throughout these questions, and I think everyone on the panel's talked about there being increased communication between insurers, brokers, clients. Anna, do you think that the element of technology changing in the way in which we do things go today, do you think that's led to better communication because it's easier now to kind of collaborate than it would have been a year ago?
Yeah, I mean, definitely. I think it's quite normal. Typically, insurers might, have monthly calls with clients and see them once a quarter and have strategy meetings, and in between everything ticked along. And I think, everyone went into overdrive as soon as sort of March, April happened last year. And because of the amount of uncertainty, there was, huge increases in the level of dialogue and the level of output, I think, coming from our market. We were, Aon, from our side, we're producing 1 point weekly reports in terms of what the market was doing, moved to monthly to quarterly. Insurers were, putting on economic updates, regularly. A lot of the large insurers were putting on economic updates, sending out bulletins. So that whole level of the need to engage and communicate in what was a very rapidly changing environment, going from, we're going to have, hundreds and hundreds of claims coming in any time now, to actually it's eerily quiet and the insolvencies aren't happening. And so let's rechange those forecasts. Things have moved so quickly. I think that is a trend that I think we will see pare back a little bit, perhaps, as we start to move back into office environment, but perhaps not to the extent that we saw pre-pandemic.
Yep. I'm going to shift gear a little bit here and pass a question over to you, Simon. So we've obviously talked about what the industry's done, how it's performed, the trends that we've had. I mean, if we think more now going forward, which is a slightly difficult question to ask you, but I'm going to ask you anyway, is what more could the credit industry do to help support trade for the rest of 2021, but also kind of 2022?
Yeah, sure. I think I just want to touch on what Elizabeth and Anna said there in terms of the flow of information. I mean, Anna mentioned, there's a huge investment back in 2010, 2012, but I think it's gone up a notch over the last 12, 15 months. The flow of information has been critical. I think all of you, I think at some point have mentioned about, we're making decisions in September last year. Well, what's the point of looking at the December 19 results? I mean, it's no point. We don't know. And Elizabeth rightly said it could have been okay in December 19, but it could be really struggling now. So I think the level of transparency of what we're seeing is gone up another notch since then, because it's had to. Because ultimately we're being tasked with making decisions, and we obviously want to make the right decisions. And if it's the right decision, it's got to be an informed decision. So that means having management accounts, and that is critical for us. But in terms of trends and the credit industry, how we can help support that, I think just touching on sort of these online platforms and how we keep in touch with our insureds and our brokers, particularly the brokers. So if I give you an example, my role is business development, and I would go around the UK visiting the branches, the offices. And I tend to meet with 10 to 15 brokers at a time if I go to a branch. Over last September, I had an audience with over 250 brokers, just purely because I can connect with them online. I mean, in this ever-increasing world of environmentally friendly, I mean, that's huge connectivity there in one go instead of just traveling. It saves a lot of time. And particularly in your role, Ian, with business development, I think, I think it's good in terms of maintaining relationships at these platforms, but actually business development, I think that does need to be done face to face. You need the realistic world. So in terms of your question, what can we do to support? Yes, we'll utilize these online platforms, but equally, if we don't have the relationship, I'm still a big believer you need to build that relationship and go there and speak to the person individually in person. And I think you'll see that a lot more, Ian.
Yeah, I agree. At the end of the day, We're always selling trust, aren't we? So, and that is best gained face to face. Elizabeth, your thoughts? I know obviously you mentioned that you have had credit insurance. You got it originally for Brexit. So you've had it last couple of years. Is there anything you'd like to see the industry do either more of or just continue to do as we kind of come out of this?
For me, probably more of is information sharing. So I do find that we get quite a lot already, and it has increased during the pandemic. Like Anna mentioned, we were getting bulletins about what's happening in the market, analysis on specific industry, which was really helpful. But I have noticed that that's kind of dropping off already. So I would quite like to see that coming through. Because I think that kind of advice from specialists is what's really going to help us to make those crucial decisions. And it's the same when we do apply for limits, that as much as we need to try and not be too risk averse because of what's happened, I would like to see the credit insurance do the same, really. And I get that we all need a cautious approach, but we also all need to continue to trade. And I think it's particularly difficult for new businesses because they often get turned down for the simple reason that they're new. And again, we should probably look at what industry are they in, are they up and coming, what's their outlook, and then maybe take a bit of a leap of faith rather than basing a decision entirely on the facts that you have available, because that will potentially have us lose out on some business or have to take the risk of trading with them and then not be insured, which companies are obviously going to shy away from. That's kind of what I would like to see.
Yeah. Especially when, as both you and Conrad have said, that whilst the insurance is there, obviously protect, realistically, if there is almost opportunity protection, because when used in the right way, it can be that catalyst for growth.
Exactly.
Conrad, any thoughts in terms of what more we could see from the industry?
I think Simon made a really good point about the use of technology, and that meaning he could connect more easily with more people more quickly. And I think that kind of linkage is going to carry on. And I think actually this conference, for example, is a prime example of that. No one's had to travel anywhere. We can fit this in within our normal working day, understand things, and then carry on working. And it's actually really useful, as opposed to the hour and a half travel to the conference, sitting down the hour and a half back and maybe losing opportunities, even though it's face to face. And I think the use of video technology actually has been really interesting in that we've gone from a position whereby no one did a video call because no one was quite sure what the technology at the other end might be, or if they had it, to being the assumption that everyone has video technology. So I don't know about the rest of you, but I can't remember the last time I made a normal telephone call. It's now a video call. Everything's a video call. And I think this is great because actually it's making life easier to communicate, to explain ourselves, to have the discussions. And I think to some extent, maybe we'll lose some of the face-to-face. I'm sorry to say, Simon, but I think the face-to-face will become more important, but less frequent. Those meetings will have a lot more defined agendas, perhaps, and we'll replace a lot of this. So I think this, because it's easier to build that relationship on the video as opposed to the telephone, I think that is going to be one of the major trends that's going to take us forward.
Hopefully gone are the days with the conference dial-ins and put your pin in, all that sort of stuff. So hopefully this is the future. Anna, last but not least, but anything you want to add in terms of what the credit industry could do to support?
I mean, I think I sort of echo a lot of the comments that have already come back. I think particularly Elizabeth's comments around, I think for clients, that point around, wanting insurers to maybe start we've had a relatively benign environment for the last 12 months. And I think, insurers do need to start looking at some of those more marginal risks again, those risks that are sitting there in those sectors which are just starting to reopen and which we know are challenging. And as an industry, I think, our markets need to look at those sectors and put in plan real strategies about how they're going to support businesses moving back into those sectors, especially for clients that, on the whole have got really good performing credit management and good performing programs. We need those grey areas. That's where we need the insurance market to really step up and say, we're happy to take a higher level of risk on some of these based on what we know about our clients, the way they manage risk and their performance. I think also, when we think about looking ahead, and I'm probably fast tracking a little bit now looking ahead, but we do expect claims are going to come. I mean, when and where and all this, I'm sure we can debate that point, but I think it's going to be really important that as and when they do come, that the insurers perform. This is cash flow. At the end of the day, this is important cash flow for clients. And when if those claims do come, that I think insurers assess quickly, respond, and ensure that the product actually delivers what it needs to deliver in a really timely fashion for clients, to kind of help, again, just give confidence to the product and the sector, and support clients that have been very loyal over the years.
Yep, I certainly agree with that, and I think it was either Elizabeth or Conrad who mentioned the term self-fulfilling prophecy, and that is the risk when you start to judge a sector as an entirety rather than the individual businesses within it. So we've had a question that's come in, so I'm going to segue to that and break from our 5 just before we finish with the final question. But it's very topical given what we've just been talking about. So Richard asked the question, which is, what additional information could credit bureaus provide to help with taking a chance on customers that may not be currently in use? So what additional information could businesses provide through obviously a credit bureau that might help in terms of decisions? So I'm going to open that up to Conrad, Elizabeth. You can fight over who wants to go first, but
I think in our case, when we assess a company for credit and the initial decision looks like we may not be able to extend credit to them, is always to speak to, say, an owner or a CEO or a CFO of the company and just find out what's actually going on. Because a credit report alone, and I'm a strong advocate of that, it is just data, and without turning that data into information, you cannot make a decision. So for me, it's, if our client is open up front, let us have a look at their accounts. I know there's a couple of clients where we said, oh, can we see your most recent accounts because they haven't been filed yet? And they were like, God, no, of course you can't. It's like, well, you're going to publish them anyway. And then it's almost like, well, what are you trying to hide if you're not sharing them? So I think absolutely, if you feel that as a supplier, you are absolutely able to pay your debts and you should be getting credit, just back that up with data and with some evidence and have that conversation with your client. And again, it's that collaboration piece that's been so huge and vital throughout the whole pandemic that we absolutely need to carry on and just have those open and frank conversations. And what you could even do, and we do that, is a bit of a trial period where we maybe extend you only a few days credit for a month or 2, see how you perform, and then we increase that as your performance continues to be in line with our expectations. So for me, it's don't say no, try and find different avenues that ultimately make it a win-win for both parties.
Thank you. Anything you want to add to that, Conrad?
I think all of those are excellent points and things that we all do to try and manage. And it's quite I think to some extent, credit management is sometimes an art, not a science. And it's how do you feel about something as much as anything. However, clearly, what other information would be useful? Latest management accounts. Where do the auditors currently sit? Are you prepared to offer me a personal guarantee or a bank guarantee within the UK, for example, to give me confidence that you're going to be okay? I think Elizabeth pointed out about trial periods and all those elements. Absolutely. But I think from a credit bureau, what would we like to see? A lot more relative data. How is this business structured compared to its competitor set, with its sector set? How does it benchmark against that sort of smaller area? And that kind of analysis, as opposed to looking at the company on its own as well. As I think Elizabeth touched on right early on, was the small businesses, the new startups, the initial phase. How does it look? How does it look against competition? Is it normal? What are we seeing? Is this normal? What successful businesses started with a similar profile and are now okay and a good risk? Therefore, is it on the right track? That kind of comparative information would be hugely useful to help make a decision. And I think we all recognise, it's the classic thing is it's easy to get insurance for something that doesn't really need insurance. I always want insurance for things that probably do need insurance, and therefore that's that constant battle between the purchaser and the offerer.
And Simon, I'm guessing that all the stuff that both Elizabeth and Conrad have just mentioned would be gold dust for you in terms of writing a limit and being able to underwrite a certain customer.
Yeah, no, absolutely. I mean, just touching on the point about when do you get insurance? You always want insurance for the stuff that are dealt. Things do progressively get more difficult. And with Elizabeth, I noticed she mentioned she had non-cancelable limits. I doubt very much she would have got the non-cancelable limits in March or April last year. So I'm pretty sure you buy them in the event of something deteriorating. So, I mean, well done, Elizabeth, is what I'll say there. But also, Elizabeth said, in terms of the issue and speaking to individuals, I'm glad she mentioned speaking to a CFO and not a CEO. And before I ostracize myself against CEOs around the UK, CEOs are there to grow the business, where the CFO is there to look after the liquidity and the finance of the business. We always want to see the liquidity, the banking facilities, the covenants, the headroom they have, and touching on the management accounts, that Conrad said, the P&L, balance sheet, cash flow. Those are all integral for us to do in our roles. And the quicker and the more availability we have access to that information, the quicker we can make a decision.
Thanks, Simon. So there you go, ostracizing yourself from all CEOs of the UK and all one fell swoop. Well done. Last question, and Conrad, I'm going to start with you on this one. We've all kind of mentioned already how low claims figures are at the moment. We know that goes hand in hand with the level of insolvencies. We know that there's factors as to why insolvencies at the moment are, you could maybe even artificially low, given the stimulus and various other things that are in there. So do you believe that will change in 2022 when you compare it to not 2020, but the pre-pandemic levels?
I'm an accountant at heart, and therefore always slightly pessimistic about the world. I think that's what's beaten into us early in training. And just to be, in my mind, I think we've got a backlog. I think we've got some businesses that would have gone without the pandemic that haven't. I think we've got some businesses that are struggling because of the pandemic. I think we have some businesses that, as they try to reopen because they think they might be okay, are also going to struggle. As trade may not come back with a bang, but come back measured over time as people build their confidence, as people start to change their behaviors. We've had 18 months of people basically sat in their own houses. I don't know whether people are ready to go to a busy restaurant, to a busy pub, to a busy cinema, those sorts of social occasions which drive so much of our economy, and the knock-on effects that then filter throughout, and all the service industry that those support. I'm not expecting everyone to suddenly on the 19th of July suddenly go back to pre-pandemic positions. Overheads are the same. Trade may be lower. They could struggle. We could fight. And I think we may lose some more people who could otherwise have survived. So I'm going to be pessimistic and say I don't think things are quite what they were. And anecdotally, there's been some quite big structural changes, certainly within the retail environment that I'm seeing. In my local town, we're on a bit of the edge of the UK, should we say, and I've seen an awful lot of major retailers pulling out. They're changing their footprint. Now, that means that there's job losses. That means that there is less value in the economy locally, and therefore they could have further knock-on effects onto those independent businesses. I think in the medium term, there's some upside. Those regional players will grow and come into those spaces, but I think there's going to be a transition period as the major retailers pull back and sort of newer regional players move in. So I think there's going to be some knock-on effect from that as well within the local economies, within that smaller trade environment.
Yep, that wasn't too pessimistic for the accountant there, Conrad. You did all right there. This is mixed. So Elizabeth, same question to yourself. I mean, we saw claim figures low. What's your thought in terms of 2022?
Yeah, I'm going to be a little bit more optimistic, and the reason for that is, if I look at the industry sectors that have struggled last year, and I agree with the points already made by various of my colleagues, in terms of there may be some business that have just about hung on because of the government support that's been available, but may struggle to come back. I think most firms and companies, I would like to hope, have managed to come to agreements with those particular clients and cleared the books, if you like, with those. I mean, we certainly have. So in terms of those clients potentially not being able to pick things back up, that wouldn't really represent a risk to us. So I personally would expect it to kind of go back to pre-pandemic levels, and they were already, I would say, low at that point. So at the moment, I personally don't foresee a huge risk to our own, dare I say, ledger balance. Hopefully not famous last words, but yeah. I do think we have diversified the client base that we are now trading with, and with all of the things we've discussed by, just being a bit more cautious as to who we extend credit to and having that collaborative approach with our clients. I think we should hopefully be able to still keep in the insolvencies, or certainly the impact of those on our own business, minimal.
Thank you for that. Yeah, and hopefully it's some famous last words, as you said. I wouldn't want anybody to be tempted fate on this discussion panel. Anna obviously sees things from a slightly different side, being a broker. But what's your thoughts in terms of claims for 2022?
This is like the Mystic Meg crystal ball moment. So, given there's all these professional economists that have failed to get it right, I feel like this is quite a dangerous area to be making guesstimates. But I mean, look, there's no doubt. I think the insolvency rates are going to go up, and the claims are going to go up just because we are in such an artificially low place. I mean, I think, Simon, we were looking at this before, but we would see the ABI stats. The Association of British Insurers stats are showing that. I think the Q1 this year, the claims were at the lowest level since the ABI's ever started recording claims in 2007. So I think that tells you everything you need to know, that we're going to see an uptick, because that's just natural as the government stimulus and actually things start to become go back to normal. I mean, interestingly, 2019, we talk about pre-pandemic levels. 2019 was actually a pretty big year for claims in our industry. So it was actually pretty exceptionally high, and higher than it had been for many years before that. So I think that in terms of when the claims will come and whether they'll come in a spike or whether they'll be, I'd like to think, I'm going to go with Elizabeth, and I'm going to try and be more optimistic here. So I'd like to think that because sectors will recover at different paces, I think because some of the government stimulus will unravel, and hopefully the unwinding will be fairly orderly, that we're going to see an uptick, but hopefully not sort of a big, huge spike, but perhaps something that is going to be balanced out, perhaps over a longer period of time. And I think one thing we have learned as an industry, and I hope will happen, is that maybe a little bit more a willingness from businesses to work with customers and insurers to help manage businesses out of difficulty, rather than maybe rush to kind of start taking action, legal action more quickly. I think we've been prevented from doing that because of the government measures that have been put in place. But maybe that's changed behaviours, and maybe that increased collaboration will mean that we will, as an economy, if you like, work a little bit more closely together to help nurse businesses through some of those difficult times. So fingers crossed. Here's like wishful thinking. So,
yeah, I completely agree. And Elizabeth obviously touched on businesses releasing maybe financials early, or giving information on, earlier than maybe when it's actually published, to try and help a decision. I think that goes not only to obviously the clients, but also to the insurers as well, in terms of making sure they're open, and giving the insurer every reason to continue to write cover. So trying to balance the optimism with pessimism here. So I'm Simon, coming across to yourself. We'll see where you're sat.
Well, you know me, and I'm a glass half full kind of person. Yes, there's definitely going to be an uptick in claims, as Anna said, and 2019 was a record year for our in terms of losses in our industry, but that was primarily driven by Thomas Cook. That went bust in 2019. There was huge exposure in our industry on that company. But I think also at the same time, if you look at the data the Bank of England have given out, pre-pandemic levels, UK consumer savings was around about 6 billion, tracking at 6 billion. As of April this year, that was tracking at 150 billion. So the economy is going to have a sort of an injection of liquidity when people can start traveling again. Admittedly, it will go largely into the travel industry because people do want to go abroad. But I still think we're going to get such a big liquidity input that I think it'll be quite measured. So I'm trying to taper myself of being a glass half full type of person to there will be an increase in claims, but there's also a liquidity.
No, look, I think you did well there with the glass half full, mate. And yeah, like you said, there is a lot of cash around. It depends whether consumers will actually spend it. Is the big question mark that I don't think any economist knows at the moment, but it's certainly there, ready to be injected in. So we've had quite a few questions through. I'm conscious we've only got 5 minutes, and there was one question which I wanted to pose to both Conrad and Elizabeth, and it was from Andrew, and it's around whether or not businesses will take more risks as we come out of the pandemic to try and encourage growth, or they'll take less risks, so therefore be more risk averse. So Elizabeth, I'll start with you on this. Do we think it will be more, less, or the same?
Oh, that is a good but difficult question to answer. Personally, I think for our organization, we will work with clients and find a way to make it work. Are there going to be clients where we potentially have to say no? I think there will, but I would like to think that that's going to be the exception. We are definitely not risk averse. I mentioned before, we still benefit from non-cancelable limits, so we have a slightly better position there where we can take a little bit more risk. But absolutely, yes, we are going to continue to take measured risks and work with our clients where possible. Absolutely, because like any other business, we have been affected by the pandemic. We are still expecting to be impacted by Brexit as well, being a recruitment company that does, of course, supply workers from all backgrounds. So I think based on that, we have our own corporate responsibility to continue to make sure that trade strives.
Thank you for that. Conrad, anything to add on that?
Yeah, I think there's some good points, and I think from Imperial's perspective, we maintain our measured, thoughtful approach, support those businesses that need support, have an open dialogue, ensure that we can align with objectives and take our business forward. I think as a general point, I think it's going to be very much around about the sectors that businesses are in and the state of their business. I think that we may find some caution with those businesses that are okay, but I think with some businesses that need to perhaps maybe footfall is an area I'm looking at, and within retail, maybe drive some additional footfall, they may have to be a little bit more aggressive in order to take them through this period. I think this transition period may well be underplayed by a lot of people. And I think the run-up between now and Christmas, particularly, is going to be quite critical for a number of businesses' survival. And how we, certainly within the UK, for example, how we respond to the unlocking, to the changing environment. Are we going back to our offices? Are we going to start doing the things we used to do at the frequency we used to do them? And I think that is going to be the driver of where the risk is. Yeah. But I think as a whole, some businesses are going to have to take a bit more of a punt, I think, going forward.
Cool. Thank you very much for that. So look, time-wise, that brings us to the end of this first session. So thank you for everybody who's obviously listened in. Thank you to all the questions. Obviously, we couldn't get through them all, but we did have a lot, which is great to see. So if we keep that activity, interaction throughout today, we will obviously get to as many as we can. So thanks to the panelists, Anna, Elizabeth, Conrad, Simon. Thank you very much for all your time. I'll hand back over to you, Colin.
Thanks, Ian. Yeah, just want to echo your thanks to our panelists there. It was really interesting. The optimism and not the pessimism, but the change that we're going to see is going to be interesting, and where we go back to. And it obviously leads us in quite nicely to our next session, which is going to talk about business change and credit management. So if anybody has a desire to join that session or any other of our sessions, have a look in the agenda section there. There's a link at the bottom of the page that says click here and sign up for that. That'd be great to have you on board. I was just having a look. We ran a quick poll throughout, and we'll share this on our review afterwards, and also some of the questions that I think we missed a couple of, unfortunately, just to time. We'll put that together in our view, which we'll publish on the Credit Connect website next week once we've got time to gather everything. But interesting about a lot of people seem to think that we may be able to regain some kind of normality in 2022, but who knows really is I think my kind of thought on that. So yeah, but let's round up anyway. I've got to move on to the next session in 15 minutes. That's going to be begin at 10:45, and thank obviously our panel. Thank Ian, of course, for his smooth presenting skills there, and also of course Aon for supporting this event as well. Really great. We'll be logging off now, so we'll join you at 10:45 in our next session. But thanks to everybody, and I'm going to close off this session. Goodbye. Thanks a lot.
Bye.